And I'm reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves. Good evening, everyone, from Chicago. It's Thursday, August 20th, and I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you're with us tonight. I have tons of great data that you're not going to hear in other media outlets. It's here for you guys. It's meant to encourage you, and it's the truth. From COVID to clarity, this is CB3 Live. All right, Corona America still ebbing nicely. That's a good thing. School openings, however, in doubt. We're going to look at that in a little bit. Market shakes the summer doldrums, hit another high in the NASDAQ today. Going to definitely dig into that. And the political season begins. I'm not sure you guys know this, but there's a general election on November 3rd. Let the advertising begin, right? Oh my gosh, here we go. So I got everything on one screen for you. If you have not yet subscribed, please click the subscribe button when you go to our YouTube page. Mondays, we're usually pre-recorded. This Monday will be a little different. I'll tell you about that at the end of the show. And then back here next Thursday night, Facebook, Twitter, definitely sign up for those guys. I'm tweeting every single day. And if you miss one, you can see it on our website. And LinkedIn, you can see me there too. So coronavirus, what is going on here? Well, the major indices started down today and then finished near their highs. Actually, the NASDAQ made a new high after Johnson & Johnson reported they plan to launch by late September the largest clinical trial to date. You've heard me talking about 20,000, 30,000. This is 60,000 people that are willing to take this test. Experimental shot. It's a big deal, and obviously, if this comes through in front of the election, it's definitely gonna be good for a lot of us. So, in fact, all of us. The latest numbers, I always start with this one. I'm still pointing out in green. Yes, there's 1,324 deaths yesterday, but the data is still coming down. The deaths are coming down. The cases are going up slightly. It's fine to have cases go up. We don't want deaths to go up. When cases go up and deaths stay the same or go down, what that means is we have a lower morbidity rate, and that's really encouraging. You guys have seen a variety of these maps, and this was finally getting to be encouraging. The purple states are where the problems are. Notice from Florida to Idaho, from California to Tennessee, there's really no rhyme or reason, although the dark blue are virtually having no problems. That's New England, and look what's in there, New York. New York is showing a minimum of new cases. That's good. Finally, it took a long time. The death rate for each death range, each age range, I should say, you can see it's just off the chart, and it really does not matter what race you are. Whites tend to have less deaths than other ethnicities, but the age thing is really the deal. They thought it was everybody that was 60 and above. It's really 75 and above, and really 85 and above. So the data, as we've been accumulating this since March, is just more and more in favor. If you have grandparents, great-grandparents, keep them at home. This recovery tracker, I show this about every 2-3 weeks. Still seeing the most recovery on the financial part of the economy, the mobility part of the economy, meaning people actually being able to get out and get around. And then production, the last bit of recovery is in health, and it's hardly making any improvements. And that is in comparison to the other aspects of the economy. So obviously health is improving. That's what this whole section's about. But compared to other aspects of the economy, it's just not. I showed you this last week, but I want to show you again because now I really believe this most likely trajectory for full recovery. You see the most likely there? That's looking like we're going to see a vaccine and a full recovery in the economy by 2021 second quarter. So that's second quarter of next year. Now, that doesn't mean that's going to be that long for a vaccination, but remember, the minute they announce it, it doesn't just immediately get inhaled or imbued by 330 United States citizens. It takes a while to get this done. If it takes longer, then these other trajectories are possible, but the market, by the confidence they're showing me and the data that I'm going to show you in the next section, is telling me that they believe that this vaccine is really just around the corner. Amazingly, for those of us living in Illinois is seeing the 5th fastest recovery amid this pandemic. Now, it's kind of strange. We're going to talk about Illinois in just a few moments here. Our governor is pretty much in lockdown mode, but this is great news from Wallet Hub, which is a pretty good source. You guys may not know about it, but I have 25 or 30 sources that I use to produce this data for you guys on a weekly basis. This is good news for us in Illinois, and I would say good news for other states that have large urban areas and significant rural areas, okay? So my question for you guys tonight is, how will the COVID lockdown end? Slight different from previous questions. A, life will resume as it was in 2019. Now, I'm not giving you a time frame on this, but when this is finally done, and it will be, answer A will be life will resume as it was in 2019. Answer B, life will be normal, but with distancing, and if you want to include with masks, that's fine. Life will stay more home-centric. It will stay that way because we certainly have been more home-centric since this began in March. And D, I just don't see what the future holds, okay? A, B, C, or D. And because of the 20-second lag here, while you guys are typing your answers in, I'm going to look in the chat, see if I've missed anything. All right, what do we got here? All right. Hey, Andre from New York. Yeah, Illinois was bad, Alice. It definitely needed to improve. All right, let's see what we got. Oh, everybody's answering here. We got a C. Will be more home-centric, Kate. Okay, I don't know what the future holds. Yeah, that's fine. We don't necessarily. A will resume. I like Tom's answer with better hygiene. Yeah, I think we've learned some stuff from this, haven't we? C, more home-centric. Normal with distancing. Good. Hey, Greg, how are you? We got a C, more home-centric. Yeah, I mean, it's definitely affected us, even in our house here. Dr. J, good to see you. More home-centric. B, distancing. Debbie, more home-centric. Martha, normal with distancing. So basically, did I see one A in here? Yeah, I got Tom, but even Tom had a qualifier there with better hygiene. Life has changed, guys. That's what I'm seeing from these answers, and I think we all know that just based on what's happening in society. And, as Tom said, if we've got better hygiene, that's a good thing. Imagine if this whole, pandemic, which did kill and is still killing people, but if it elongates any of our lives that are on this program tonight, because we have, just taken a higher respect for the need of hygiene, I'm looking for, the lemonade and the lemons here. So thanks for your answers, guys. That really helps. So is the classroom safe? So one community's debate on returning to school. Now, the interesting thing about this is you got Chicago on one side of Illinois, where I live, Quincy on the other side, right on the edge of Missouri. They have a very different take. And even if you're not from Illinois, you might be in an area or a state that has certain areas that are shut down, and then other areas that are going, hey, we don't have any cases, or we have very few. Let's get open. So what's the proper way to handle this, and what are some of the dilemmas? Let's take a look.
Parents reach out to me and say, hey, Mr. Webb, if our kids don't go back to school, I'm going to lose my job because I've got to stay home with my child.
This is a never-ending drumbeat with really no end in sight.
It's not the best. It's not what we want it to be, but it's where we are.
We're still arguing about masks and science and safety and whether or not that the virus is a hoax.
As students across the country prepare to return to school in the midst of a pandemic, the big questions on the minds of parents, students, and teachers are whether it will be safe to return to the classroom in the fall of 2020, and if it is safe, what will learning look like? One state that is struggling to answer those questions is Illinois. In parts of the state where the coronavirus cases and deaths are spiking, administrators are being cautious. In August, the Chicago public school system announced that its entire first semester would be remote. In other parts of Illinois, outside Chicago, residents disagree with a mandate from Governor J.B. Pritzker requiring masks in schools.
Since I've been active here in the city of Quincy, this has been the most divisive issue that we've seen. In Quincy, we're very distrustful of edicts coming down from Chicago. You'll see signs here in Quincy, Illinois that says Quincy is not Chicago. And certainly our way of life is a lot different.
Hey, nice to meet you. I'm Doug.
Roy. We came up with that we're going to do in-person instruction, bring kids into the school. We're going to have a remote option. If parents don't feel right for any reason, they can choose to do that remote learning plan.
Across the country, schools are assessing their own community's risk, and in many cases, adopting their own hybrid learning models that include both remote and in-person options.
We're going to require masks. We're going to social distance as best we can. As you come into the schools, you're going to get your temperature taken.
Recently, the mother of a Quincy fourth grader sued the city school district over mask and temperature check requirements that have been handed down by the Illinois State Board of Education. The mother claims that she and her child would suffer irreparable injuries and that the requirements infringed on her child's right to an in-person education within the public school.
There are parents that are encouraging school boards in some areas of the state to open without masks. That is against the rules in the state of Illinois.
The case is still ongoing. The mother's attorney said that she hasn't yet made up her mind about whether her child will go to school remotely or attend class with a mask.
The lawsuit that took place, did it upset the town? I think there's both sides of that argument. There are differing viewpoints in town on masks, on the COVID-19, and all the information coming out, just like the rest of the country.
Webb knows something about working in challenging conditions. The former brigadier general with the U.S. Army National Guard in Iowa served tours in Iraq and Afghanistan.
I've been in combat, and nothing compares to what we've done since March. It's difficult, it's stressful for my teachers, for my staff, and for our community.
In Quincy, that division is on full display on residents' lawns. But Webb told me that most of the tension in the town can be found online.
I'm on social media quite a bit. It's part of my job as superintendent. So I read the debates, and I read what they call you if you wear a mask. I read what they call you if you don't wear a mask. And that's a bit discouraging.
In July, Webb became so frustrated with the division in town that he wrote a post on Facebook about the lawsuit, calling for unity within the community.
I harbor no animosity toward the mother. I believe she is trying to do what is best for her child. All our parents in the Blue Devil family are stressed, tired, and a little upset. They are just trying to do the best they can.
At the elementary school, I talked to Principal Chrissy Cox to understand how she is preparing her teachers.
And I'm Chrissy.
I'm Doug. Nice to meet you.
Nice to meet you. So I'm going to show you something that we've done with our nursing offices. We've created a healthy office, and then we've also created a sick office. So if students are having any symptoms of COVID, they would come to the sick nursing station. You know, if they just need an ice pack or a Band-Aid, they're going to come to the healthy office. This is our inexpensive way of ensuring that students can meet in small groups. So we're going to provide these for classroom teachers.
Schools in Quincy have received funds through the CARES Act to supply students and teachers with masks and sanitizer, as well as modify classrooms. But according to Webb, those funds are limited.
No longer do students sit in desks in rows. The classroom really looks different.
Courtney Erft is a fourth grade teacher at Denman.
Physically, my room is pretty much how it's going to be when the first day of school comes. So this year, they're facing the same direction, and they're separated this way and this way as much as they can be to accommodate to physical distancing. Last year, they were set up to be collaboratively learning, so they were put into groups. This year, they're going to be more in rows and separated.
What's the book, the quarantine book's been for?
So this year, to keep kids safe with checking out books in our library, we will have a bin that they will put the book in when they're done with it. So typically in the past, when they're done with the book, they just put it back in whatever bin they got it from.
With the town divided, Principal Cox explained how she was handling the disagreements on her own team.
One of the things that is really important to me is relationship and ensuring that we can maintain a positive relationship even if we have a disagreement on how things are going to be. So, quite honestly, masks are a huge, you know this, right? Like, masks are a huge topic of conversation. And so I've shared with my staff, like, we're going to continue to follow the guidelines, and the guidelines are that we're wearing a mask to school. It is not our job to come to school until and tell people how we feel about masks, whether we are pro-mask or anti-mask. Like, that's not our job. Our job is to wear a mask.
But some residents are skeptical that a return to in-person classes can be successful, even if masks are required.
It's been disappointing that our political leadership hasn't taken more of a stance of enforcing simple measures to help with our safety.
Linda McCarty has been an educator in the Quincy area for 25 years.
Our daughter has chosen the online academy. We looked at the science, we looked at the data, and made the decision that was best for our family. We feel that it's too dangerous to send her back into a large school setting.
As of August 13th, Adams County, which is home to Quincy, had 580 positive cases and 7 deaths.
So when you look at that data, it appears very safe, but just within the last 3 weeks, our numbers have spiked. So we're starting to see the trend that maybe the coastlines or the larger cities saw in the beginning.
Schools nationwide face uncertainty due to the pandemic, and many have changed their plans. Superintendent Roy Webb says there's a 50-50 chance whether Quincy schools will reopen. As of today, students are set to be back in the classroom on August 20th.
In combat, you get a deployment. You also usually get an end date when you're coming home. We don't know when our end date is.
It's really a tough situation, I tell you. And the reason I played this is because you saw that, I think you saw August 20th is the date everybody's coming back to school. That's today. So we'll see if those Quincy schools stay open. You probably are aware that Notre Dame University opened Indiana, North Carolina, and then had to reclose because there were so many cases. Now, I don't know what happened at those schools. I don't know if people were running around without masks or they were jamming people in classes. I find that hard to believe. But we're still not done. We're still definitely not done. But I do believe that it's going to get better. I really do. But I had to show you that. So on the market, NASDAQ just continues. Guys, this is just unbelievable. The stats I'm going to show you in the next 10 minutes. The gap between that and the S&P, the Dow, which is still negative for the year, the Russell, which is still negative for the year, 32, almost 33 points difference between the NASDAQ and the Russell. You got to be asking at some point, how can this be? So I'm actually giving you the data tonight to show you why. What's amazing to me, I said quite surprising on here, but I think it's amazing. The NASDAQ has made 34 all-time highs so far in 2020 in a recession, including today, while the S&P has gained 4 successive months in a row, all while the United States unemployment rate is above 10%. The last time we were above 10% was in the Obama administration in 2009 and 10, and then it came down from there. But we didn't have market highs. We didn't have the kind of data that I'm going to show you here. This economy is unbelievably resilient. Folks, it's just stunning. I mean, there's just no other way to say it. S&P set a lifetime high. It finally caught up to the NASDAQ on Tuesday. It's pulled back a little since then, but it basically pulled out of its trough with a genuine V-shaped recovery in 126 days. You might not say that's not much. I'm saying wow, huge wow. Why? Let's look back to 1966. That's the light blue line. Do you see that kind of V there? Now the dark line is 2020. Notice that the pullback was far more deep than it was in 1966. And yet 126 days versus 310 trading days, not just calendar days. There's been nothing like this recovery in the market. And as a result, the job swing is in full swing. Okay, the job boom is in full swing. Notice, I want to be honest here, the scale, we're still down. We're still down 7.4 million jobs. But look where we were just months ago. Okay, I put this on here because I like the caption, bad breath, but it's not breath. It's breadth, and that is going to the point that so many of the market pundits, every time we see one of these takeoffs out of a recession, oh, this can't be real because not every sector is participating. Well, no kidding. We've had a major trajectory shift in America, and all the sectors will never participate the same way again until those asset classes and those industry groups like airlines, like leisure, like restaurants, figure out what hit them and how they're going to get back on track. We're not going to sit around and wait for them. They're going to have to figure this out or will be left behind in the recovery. We're seeing, for instance, the weighting of the sectors, the Russell versus the S&P. Look at this technology. We wonder why the S&P is doing so much better than the Russell. Of course, the NASDAQ is just on fire. But it's because the weighting is in technology. For the most part, technology has not been hurt by this. Look at the difference. The olive, I guess orange or whatever you want to see it on your screen, tech. You know, at 24% for the year, which is roughly about where we are. Or actually, we're more than that on CG right now. The S&P, the FTSE 100, that's England. And then the banks. The banks have been killed. Just killed, and that's because People are rushing into bonds. So at the same time as the market is making new highs, people are buying bonds and driving the yield down. Today it's 0.64. That means less than 1%. You're giving someone $10,000 to make $64. $64 a year return when you've got stocks that are returning what they are now. It's crazy. It's just crazy. Okay? Asset selection. This is similar to what our asset preference is. Tech, pharma, discretionary. That means consumer discretionary. Communication services. That means Facebook. Industrials, all way outperforming what's called the defensive sectors. Now, you would think coming out of a massive downturn, like what happened from February 19th, the high, down to March 23rd, the low, 2191 in the S&P 500, that people would be piling into defensive stocks, staples, materials, look on the screen, insurance, utilities, energy. They didn't. They dumped those stocks. They dumped those stocks because they believed that there was going to be a recovery. A lot of people did that. The shallowest GDP correction on record, okay? The U.S. versus Austria, Belgium, France, Germany, Italy. Look at how much worse those Western European economies have done, okay? There's no Asia in here, but this is just looking at Western Europe. None of them can even compare to how well the U.S. has done. Are you seeing any of that mentioned at the political convention this week? I didn't think so. U.S. stocks lead the world. Europe, UK, Japan, China, Hong Kong. This is this year, folks, the increase from the 2020 low. So from March 23rd, who has made the biggest comeback? If this chart doesn't tell you, I don't know what does. Again, nobody's telling you this in the media, but this is straight off Bloomberg's terminal, a liberal organization. Apple topped $2 trillion in market cap this week. To give you a perspective, the GDP of Italy, a G7 nation, Italy, is not $2 trillion. It's 1.991. The whole country. Now, I realize that's production and this is market cap, but this just gives you a staggering amount. In a recession, folks, Apple topped $2 trillion. What does this look like on a chart? Okay, there's Apple up at $2 trillion. Amazon, Microsoft, to a lesser extent, Google. All right, we're just moving ahead. We're just moving ahead despite. Look at this chart. Apple is the dark blue, okay? So in the last 20 or 10 years, I should say, it was Exxon that was the largest company. Boy, that was a long time ago. And then you see that tiny little black sliver. That's when Amazon was the largest company in the world for about 19 minutes or something. But since then, it's been Apple and Microsoft back and forth. And Applesoft, that was an interesting slip. Apple has conclusively been the winner, $2 trillion. And I tell you what, Tesla's on its way to $1 trillion. I mean, it's just astounding. And yet, there's plenty of spending going on at your everyday, everyone's favorite Walmart. Look at this bump of 97%. Largely, people are saying because they're spending their stimulus checks. They're spending their stimulus checks and redoing their home, improving their home. Okay, look at their quarterly sales compared to previous years. Now, down a little bit here. And now 21, you're saying, well, it's not 21. Well, Walmart actually, they don't have a physical calendar when they show sales. They have, they don't have a calendar. They have, they're actually 2 quarters ahead because of their cycle, because of their business cycle. But they're seeing just the same kind of improvements that the other high-tech companies are seeing. Target shocked the market up 11%. No, we were not in it. I dumped it earlier this year. Dumb me. But nonetheless, look at the digital section. If you can, lean into the monitor a little bit, look at the light green. So people aren't going to the stores, but Target has the infrastructure set up like Walmart. They are not being pushed out of business by Amazon. Folks, if you don't have a digital presence to compete with Amazon and Target and Walmart, you don't have a chance. And that's partly the trajectory change for a lot of American retail. All right? But what about non-retail? Okay, that's what we're talking about. On the internet, How does that compare to previous years? Surely it can't be as good. Look at the chart. Look at the chart from Bloomberg and the Daily Shot. Look at how 13, 14, 15, 16, 17, 18, 19 all started, and look at how they finished. Of course, it turns up in November and December. It'll be real interesting when I'm showing you this data around Christmas time if there's this kind of move. But so far, guys, this is the best year in retail since 2013 in a recession. In a recession. So here's from the Commerce Department, the U.S. Commerce Department. This is where we are. You see that little black arrow? I put that there so you could see this. We have surpassed retail sales from February. That is what I call a V-shaped jackknife, and we have eclipsed that. And yet, here's a piece of shocking news. Amazon is now betting on people going back to work, and they have expanded in major cities, including New York, adding 2,000 jobs, 3,500 employees in 6 major cities, and these will be working in offices. I'm sure the commercial real estate people really appreciated that. So it's not totally one-sided, like the Facebooks and the PayPals and the others, Netflix, that are saying, no, we're going to work at home. Okay? So Amazon has taken a different stake from that, and I like that. I like that a lot, because that's a huge company saying, you know, we have confidence that we are going to come back strong. It may not be right away, but we're getting space right now at a great rate. Sorry for all the data on this screen. If you just want to go to the green, that's what matters. Total industrial production increased 3%. Doesn't sound like a lot, but the consensus was lower. They revised June up only 0.3%, but it's a revision up. What's the key takeaway? That even though total production remains well below a year ago, we get that. The production of motor vehicles and parts has largely recovered. You remember that retail chart I just showed you? The chart looks just like that for auto sales. What's another reason why they look like that? Interest rates. Guys, they can tell you everything they want at these two political conventions about how they're worried about being empathetic and kind and whatever. And the Republicans will get up and say the thing. Here's what moves the markets and benefits people. Low interest rates. Because it increases their purchasing power. It increases their confidence that their financial future is going to be strong. That's what the data says. If I don't show up next week for any reason, if I've stopped breathing, can you guys just remember, it's the data. If that's all you remember about all these broadcasts I'm doing, it's the data. It's the data. That's what counts. This is one of those charts where you want it to go down. We continue to see initial claims for unemployment insurance drop. Little by little, as you can see, of course, it's still much higher than it was in the beginning of 2020, but it's dropping little by little. That's what we want to see. Housing starts. I know I've shown you a lot of housing charts, and I'll stop here after a while because you're probably just overdosing on these. But the reality is the largest area of consumer discretionary, because you don't have to buy a home, you do have to buy toilet paper and soup. Okay? Housing starts. Do you guys see that number for 2020? It dwarfs the 7 previous years. The 7 previous years, it dwarfs, okay? Housing starts 5+ units. So this is multi-unit. Apartments, condos. You see the little red dot there? Highest in a decade. Highest in a decade. These are different aspects of the housing market. Existing home sales. Existing home sales. See that little highlight I gave you there on a 20? Best data in 20 years. Okay? After dropping down -18 to the worst point, the second worst point. It was worse in 2009. But from the second worst point in 20 years to the best point in a few weeks. You're never going to see this again in your lifetime, guys. Now, this is a really interesting chart, but you have to lean into your monitor, okay? Lean in. Do you see that the gray there shows a recession? Well, the gray on the right side shows a recession, but the blue line is actually exiting in the white. And that's because the builders are anticipating that this recession ends on September 30th. That's the end of the third quarter. And I think That's probably going to happen. I think the data will support that. You're going to see GDP when they're reporting on this in October, which will definitely influence the election. Third quarter ends September 30th. GDP will start being reported mid-October. Plenty of time to affect the election. You're going to see between 15 and 20% GDP, a staggering number. This is an optimism chart. So I showed you hard data. Well, then some of the other data that I show you is optimism or sentiment. And this is what the actual builders are saying. Again, highest in 20 years. Highest in 20 years. Here's another, I haven't shown you this one ever before. The number of apartment searches in red, the number of real estate listings in light blue. Basically, all the apartment people are bummed. They want to see higher interest rates because they're going, we can't compete. I just had a client today get quoted 2.5% for a new purchase. 2.5%. You know, it's just crazy. It's just crazy. It really is. Where are people spending their money? Groceries, home improvement. And yes, I know, Home Depot, Lowe's, I've been in them both from time to time. I just missed it this time. I thought this ramp up was going to take longer. We made a lot of good decisions, but we did not have those two. Lots of home improvement going on, but people spending less. Restaurants, apparel, department stores, you get all of that. And that's department stores, physical brick and mortar shopping, not online shopping. So the changing patterns of spending for consumers has happened at light speed, and businesses are just struggling to catch up with that. And that's why you see the disparity in the S&P 500 from the Russell, all these small businesses, and the NASDAQ, because those big mega tech companies were already there and ready. That's why the disparity is there. People are taking some of their money and socking it away. And candidly, even as a portfolio manager, when I could say, well, you should give it to me to manage. No, you should make sure you have a strong emergency fund. Now, granted, a lot of these emergency funds are being funded by the PPP, the Payroll Protection Plan, all right? And they're getting these checks and not needing them, and rather than blowing them, they're saving the money, which I think is setting up a good pattern for the future. This is the last chart always in this section. The 73 number is what historically is the beat rate. In other words, in the S&P 500, first of all, how many beat their projections? 82%. That's 9% above the average beat rate of 73. We've got only 32 stocks left to report second quarter earnings. So by the time I get to you next week or the week after, 100% will have reported, and I think we're still going to see this huge beat rate. Candidly, wait till you start seeing the third quarter beat rates in mid-October. I just think it's going to be amazing. Okay, here we go, guys. Now listen, this is a financial show, but I cannot pretend that politics don't affect what we're doing. You know it, and I know it. I want to be objective, and I want to just present everything that I can to show you how it's going to affect our portfolios going forward if Mr. Biden wins or if Mr. Trump is reelected. Right now, the polls say that Biden overall is ahead. I wouldn't put much credence behind that. One, because the polls are not particularly accurate. They don't take equal sample size rates. I'm going to talk about this in a future episode. And it's too far in front. If this were the same poll in mid-October, late October, it's a whole different story. Okay, so Mr. Biden leads Mr. Trump 51 or 50 to 41. 58% say they're more voting in opposition to Trump. So if you're a candidate and nobody's really interested in you and they really are just voting against your opponent, that says to me that this election is Donald Trump for or against. That Joe Biden can kind of just be like a cardboard up there in the stands like they've got in the baseball games. Is that the dumbest thing you guys have ever seen? Has anybody watched any baseball? I mean, it's just crazy. Of those who back Mr. Trump, 3/4 say their vote is for him than Mr. Biden. So that's a sentiment thing in favor of Trump. This is the one I like. So Ms. Harris, viewed positively by 39%, negatively by 35%. 14 didn't have an opinion, but that's not 100%. So 39, 35, let's see, that's 74 plus 14, that's 88. So what happened to the other 12%? I guess the other 12% of Americans think that running mate is somebody you jog with. I mean, we shouldn't have stopped teaching civics. That's all I know. Nobody's paying attention, or very few are. So how does this affect us? Well, the VIX, the volatility index, generally tends to get more volatile in an election year. You can see in 2008 it was big time, largely because we were switching from President Bush to President Obama. Of course, nobody knew that exactly at the time, but it was only 8 years after 9/11. 2016 got more volatile. You're going to see 2020 when the data comes back, and it'll just be retroactive, as one of the more volatile years that I've been doing this. You can already see this in the premium for the VIX. Now, I don't expect you guys to understand this, but when you see a bar go all the way to the right, that means more volatility. That means people like me have to spend more time being more careful than normal during an election year because of all this uncertainty, because of the drastic difference in the two parties' positions. Okay? Gotta watch that. Now, don't worry about all the numbers on here. If you can't see them, just follow the yellow line. And what this is saying is, in an election year, October, November, and even into December tend to be the most volatile months. Not so much October, but November and December. And this was the case in 2016. The astute listener will remember that the futures markets at 10 p.m. roughly Central Time on the evening in November 2016 went limit down as in negative, when it looked like Donald Trump was going to win. They reversed by 1 a.m. and then the rest of the story we all know. But expect this similar kind of volatility. I think it'll be earlier this year because, unlike 2016, we are still very much in the middle of this pandemic, as witnessed by the whole school situation that I showed you, and you guys undoubtedly know wherever you live. Okay, so what happens with the S&P? What's the most volatile month? Guess what? November, before the election and after. Now, the election is early this year. The election's always the first Tuesday after the 1st, so the election can be as late as the 8th. This year it's the 3rd. All right, so we won't have a whole lot of time in November to be volatile, but the aftermath of that, as people are jockeying for positions, depends on, we don't even know if we're going to know who the president is on November 3rd in the evening or November 4th, guys, because of these mail-in ballots. This could be prepared for this. This could be decided in the Supreme Court in December, just barely in time for the Electoral College voters. I'm not putting that as a bet right now, but I'm telling you, it's a distinct possibility, okay? So what about people's vote changing? Okay, this is a cool chart that I found from the American National Election Studies, okay? I don't know if I spelled that correctly in the footer there. Sorry about that. But as you see this chart coming down, fewer people are changing parties over a 4-year cycle. So what that means is a lot of people in the 60s voted one way in 64 and a different way in 68, different way in 72. But that has dropped over the last several years. So this actually would favor the incumbent if fewer people are switching parties. Again, I will be real interested to see how this chart develops. My bottom line to you guys is this: investors need to brace for more volatile markets watching this election. We're going to be watching and, of course, expect a wave of volatility straight through to the inauguration, not just November 3rd, and again, especially if the Supreme Court ends up deciding this election, just like it did with Al Gore and George Bush the Younger. Okay, here's the question, then I'll check the chat to see what I have missed here. So what is the significance to you of this year's election? First political question I've asked you. A, the election will have little impact on your portfolio. I underline portfolio. Let's not talk politics, pure politics anyway. What's the election's effect going to be on your portfolio? Okay, answer B is the election will have a big impact depending on which candidate wins. C, the election will not have a lasting impact after the first few months. And D, not really sure. Okay, so let me come back here and see what I've missed. You guys catch up here. Woo, got a lot here. Sad to see the separation of the kids in the classroom. I agree, but I'd still rather have them back there alive. I feel bad for all the little kids, especially because they don't understand it, Andre. You're so correct. Not so much for the later elementary school kids, but the kindergarten kids, they just don't get it, With the university cases, I thought it was outside parties that spread when they looked at contact tracing. I need to look into this more, Andre, if you're talking about Notre Dame and Indiana and North Carolina. If your children were the age you could go back to, would you feel safe sending them? I would, Tommy. I would definitely send my kids. If the proper spacing like they showed you in that video were in place, yes. Andre, sending your kids back to in-person classes on Sep 14, good for you. Man, you guys got a lot of comments here. Let me see if I can get it here. Gloomberg is the perfect, so yeah, sorry. Sis-in-law teacher for over 25 years, and she wants her kids back, and parents want them to go. Okay, well, and of course, Martha, you have a less than reasonable governor in Michigan, so I hear you. My niece's kids in Texas are going to school, live, go Amazon, good, like that. Is Bloomberg credible or not? I watch Bloomberg all day long. I have to sift. I have a bleep filter on most everything they say. Mike Bloomberg ran against Donald Trump. He spent $2 billion of his own massive fortune, which was not quite pocket change, but mostly. So they hate Trump. Okay? So are they credible but negative or incredible? I'm going to say Bloomberg mostly is credible, again, as long as you have a bleep filter. Okay? Let's see what else we got. Wow, solid numbers, wedding postponed. Hey, Dennis, how are you? Welcome, Dennis. Okay, too much good data. One day do we catch for you prepared, ready to hit the pause button. Dennis, so I think it's Dennis' first time. Good to see you, Dennis. You just got to hit pause, man, or come back and watch it again. The reason I give this much data, people have been watching this since March, okay? It's because I just got tired of the negativity. I'm going, this isn't the data I'm seeing. It's not what I'm seeing. And the purveyors of negativity just kept doing this. And so my son, thank you, Tom, Dad, you got to go live. Okay. And the rest is history. Here we are. I have to dig for this data. It's not that easy to find, but it's not that difficult. It's there. Okay. Let me go through some answers here. We got, all right. He's cardboard. I like that, Martha. Hey, you guys are really on fire tonight. I'm got to get these answers done. I don't want to run too long. So, Andre, I'm in. So we got B. We got a big impact depending on which candidate wins. I think that's true. Kate, you got a B, a D. Yeah, Tom, I hear you. Greg on a B. You got a C, B. B's and C. Hey, Fran, I didn't see you earlier. Welcome. I don't know if you're still out there in the Midwest, upper Midwest, or where, but will not have a lasting impact. I'm with Fran on this. I just think after a while it'll wear off, because I don't think now. What I didn't say is if the House stays Democrat and the Senate flips Democrat, that's a big change. We'll get into that in a little bit. Debbie, got your on a C there, and okay. Hatred will hurt us all. Yeah, I'm gonna cover a lot of this, guys. There's gonna be a lot of this. I mean, I said it earlier. I'll say it here. Live free or die. I told you I'd tell you more about this later. Michelle, I was going to do it a little bit later, but I'll tell you now. I'm going to New Hampshire. I'm actually going to Boston tomorrow to meet my son-in-law, because I couldn't go to my daughter's wedding 2 weeks ago because of COVID. And after I meet them, I'm going to go to New Hampshire, and I just want to see what it's like in this live free or die state, because frankly, there are things that are worse than death. Truth is really, really important to me. It's really important, and that's why I tell you guys this stuff. Check my sources, even if I have a typo in the source field. Check them. It's right. You're not hearing it this week, and candidly, you're probably not going to hear it next week, because even those on the right are so angry, okay? They're just so angry. So anyway, forgive me for just bloviating there a little bit. Guys, check out the website. If you're a client, you already know this, but if you're not, you can do a risk tolerance test. Click the button on the left. You can do a free financial plan. Click the button on the right. It's right there. That's what it looks like. It takes 5 minutes. I had like 4 people do this last week, and I just got their study back to them, and one of them followed up, but the other 3 just said, no, I just want to know where I came in. That's fine. That's fine. And then the financial plan thing probably takes 15 minutes just to get something started. Some of my clients actually did this for a year before they claimed managements or became manager clients. It's fine. They're free tools, guys. Use them. Use them. If you don't know where your money is, somebody else is going to find a way to take it from you. So you need to know, okay? As I said earlier, everything you need to know is right here. Subscribe to the channel, guys, so you get the updates. So I'm going to be in New Hampshire on Monday. I'm going to try to do the Monday Market mashup from out in the wild somewhere on my cell phone. So it may not be too fancy, but, I'm not going to let you guys go a week here now because we got used to this twice a week. Stuff happens over the weekend. We got the first night of the Republican convention happening next Monday, so I'll give you some feedback on that. Okay. Here's how to reach us. You guys, you can do a screenshot on this, Dennis, if you need that, or any of the other people that, maybe don't know this. But, and then I always close with this from 2 Timothy. For we have not been given a spirit of fear, but a spirit of power, a spirit of love, and a sound mind. I just think that's a great scripture for how we can live, even if you're not a believer in Jesus. That's fine. But I just think it's a positive way to live life. We got to be positive. We got to be positive. It's my deeply held belief that we will not only survive this pandemic, but we will emerge a stronger nation. Now, I just want to mention real quick here. I said this last week, and so some of you guys know about this, but I've recently been brought on board this company called Stock Charts. Don't worry, I'm not leaving, but it's the largest technical analysis website in the world, and I've already produced my first episode. It's on our YouTube page if you want to check it out. But I'm excited about it, and they actually are talking to me about presenting live if we have this seminar in Las Vegas in November. So we'll see how that goes. Guys, it means so much to me that you show up here and you're part of this program. I feel like I'd just be talking to a wall, and I'd still be talking to the wall, but I'm really glad you're there because we need to hear this data. We need to be optimistic. We need to believe in our country. We need to believe that this pandemic will end and that our lives will get back on a successful trajectory. I believe that from the bottom of my heart. And I really appreciate you guys being here. Hope you have a good weekend. I will see you Monday from New Hampshire, from COVID to clarity. This is CB3 Live.